My friends, welcome back. I just uploaded the video talking about options for this week on AMC. So if you're interested in what my opinion is on the option channel, what my opinion is on covered calls, covered puts, everything along those lines, please go watch the previous video. This video is going to be all about pure technicals. What are we looking at on the chart for AMC? Before we get started, if you haven't already done so, please follow me on Twitter, Colin_Gladman. As I always say, it's the easiest way to ask me questions and follow any news or information that I see that I think is productive towards what we're talking about in our movement. So if you like the cycle theory, I put out a video yesterday on my opinion on where we might be at cycle wise. Once again, just did a video on option chain. This video is going to be about the chart. So having said that, let's jump into the chart. You guys know the deal. I'm not a financial advisor. Everything I do is for entertainment and educational purposes only. You need to trade your plan. Your plan is the one that you are stuck with. Your portfolio is the one that you are stuck with. Do what's best for you. So as of last week, ever since January the 24th, AMC came down here, touched this support line. I drew this support line on that day. You can go back and check previous videos. And where that support touched was from the buy button collapse back in January. And it also provided a lot of resistance right before the big January run up and moments that led up into it. So for me, they typically say you want 3 solid touch points for a support or a resistance line to really be effective. And as far as I'm concerned, we have 1, 2, 3, 4, whole bunch, right? I mean, there's a lot of touch points on this line. So I would be looking at AMC, this line right here, providing support. Even if we dip below it for a little bit, I always tell you guys, you got to think of everything a little bit as a range and not down to the penny. As you can see, we've gone below this line before. However, we haven't closed below this line. Every time we've dipped below it, we've closed, back above it. So I'm going to be first and foremost looking for that support to hold this week if we see some downside. If we get in here a little bit closer, then that is going to be, let's see here, come tomorrow. Yep, that would be Monday. That's going to be right around that $16 area. Now, once again, even if we come down here, double bottom around the 15 before pushing back up. I was telling somebody that I think the most likely scenario is probably a dip in the morning before recovering throughout the day. So let's start off looking at a little bit more of everything on a macro basis. So if we do a fib from the all-time low, come January 5th, up to the top, you can see right here, the 382 has been providing a lot of resistance for us. But like I said, that 382 plus the support line is kind of creating somewhat of a ascending triangle right here. And so basically we've been topped off right here at the 382, but as long as this support line holds and we keep creeping up, eventually the idea is, you would see a break towards the upside right here. But time will tell, right? So downside wise, that would mean we'd be looking, towards the 0.5 area, which would be around like that $11 to $12. I think that would be, honestly, that's even below my worst case scenario. We'd have to see some really crazy stuff. Like it or not, what is going on with Russia and inflation is drastically affecting the entire market to the point where I think I saw somebody was saying that they would be surprised if the Fed even raises interest rates in March, because that would probably send us into a full-blown recession at that point in time. And so once again, I'm definitely no expert in that area. I'm going to be waiting around and watching as much as anybody else, but the news is going to matter. The overall market is going to matter. So this is more, once again, on the macro view. If you come up here and we take it from our buy button collapse, once again, we've got the 618 at that 1440 and the 13, which is where we have proven we've got a lot of solid support right in here. That is going to be, what was that? That was about 11 bars, so 11 trading days. So basically 2 weeks worth of trading, took place around that 618. So I definitely think that we built up some support right in here. So that's kind of more of the macro view. That would be what I would be looking for. I really think that 1450, this sort of golden pocket area is going to be what winds up being, like I said, I've said many times before in videos that I think we'll look back and everybody will wish they bought more around that $13, $14 range. But time will tell. We'll see. So if we get a little bit closer in here, I'm going to go to the hour chart now. So everything I just did was on the daily chart. Highly recommend you learn how to chart these things yourself. So that way, if myself or some of your other favorite traders are not around, you can still kind of figure out what we would be looking for. So looking at fibs on a more micro basis. Now this is still macro because this is all the way back from January 28th. So we're talking over a month. So it's not super, super micro, but we are zoomed in a little bit more here. Then I would be looking at, kind of right around this 16. Once again, I don't believe it's any coincidence that we have got the 618 running in the 618 in our golden pocket area, the 0.65 running into that long-term support line right here. So once again, a dip Monday before push back up, come back down. I think something along these lines is going to be what we see this week. Probably, dip down, pushing back up towards the 1750 to $18 range is going to be my most likely bull case for this week. Once again, my friends, you guys know the deal, barring any crazy news. If we get a little bit closer, all right, so now I'm going to go to the 15-minute chart. Okay, so if we get a little bit closer in here, you can see that the golden pocket provided a lot of support right here for the most part of the day, but then we got pushed down. So once again, the 786 at $16.08 is going to run over here and touch our support. That wouldn't be until March 8th. So right here, this area, I think this area is going to be a good area to look at support. Whoops, I totally just messed that up, my friends. I apologize. That's why I should have just deleted it. So scratch the last 2 minutes of what I just said. So we are right in the middle of the golden pocket right here. I thought that didn't look right. I was like, I know that's not it. So we finished right in the golden pocket. So the 786 would actually be below that. Like I said, I'm okay if we break below it. I really just don't want to see any closes below it. That way we keep our higher lows intact, okay? That's the big thing that I'm looking for, is I'm looking for us constantly making those higher lows. So we finished right in the golden pocket on a more more micro basis. So moving up out of that, we could, the 0.5, I think we could go through that. I think the 382 at that 1750, that is going to provide some resistance. If you go back and you watch my option chain video, there's definitely some puts loaded in that range. So I think overall this week, barring any crazy news, we're probably going to kind of stay in this $16 to $20 range. And that is a good thing, okay? So upside targets, we would go over here and we would use the trend extension. So this is going to be the fib extension. You go from your low to your high, which I guess technically this would be the highest, and then back to your next low. Okay. So looking at this, our upside targets are going to be the 382 would be 1806, 1850, 1912, the 786, 1988, and then all the way up to $20.84. Obviously, be surprised if we got that high and maintain that. Like I said, based on the option chain, I think we're going to be range bound this week. So go watch that video for more information about why. So those would be kind of the upside targets that I would be looking for. Obviously, we're getting great news about how well the Batman is doing in theaters. Yes, I know that doesn't always mean good things for AMC, but the Batman coming in just slightly over the projections and everything like that is going to be good. So that'll be a nice little boost to our Q1 earnings. Now, if we go over here and we look at the Bollinger Bands. So Bollinger Bands are, honestly, they were a little new to me. Once I started reading up on them and everything like that, the more and more important I felt that they became. So how the Bollinger Bands work is it's going to be a measuring of the volatility in the stock. So you've got your 20-day moving average that runs through it, and then you got two standard deviations towards the top and towards the bottom. And the whole goal of John Bollinger doing these bands was his goal was to capture 95% of the trading that goes on in a certain stock. So as you can see, if you look back through AMC, probably pretty close to 90 to 95% takes place in it. So when you get through the top, you're getting a little overbought. When you get through the bottom, you're getting a little oversold. So the bottom right here is going to be in that $15 range. So like I said, that $14.50, $15 range, that's going to be what I'm looking at downside. Now, before we can have more volatile moves happen, we want to see these bands tightening. For instance, once again, what happened back up in here? The bands got really tight. This is where myself and multiple other traders, we were all excited about moving towards the upside. But we flat out didn't just get the volume. The option chain wasn't where it needed to be. And so instead, we saw a huge push to the downside. Also, too, this is when it was obvious that inflation was going to be, getting worse. It was no longer transitory or anything along those lines. And, they decided to quit lying to us for a brief moment and just admit that it was going to get ugly. So instead of breaking up, we broke down. Okay? Is what it is. But we are starting to get nice and tight again. That's what we want to see. Now, another reason for some downside concern is going to be we lost, both GameStop and AMC lost their 20-day moving averages. So I think I tweeted out going into Friday, like, hey, it acted as resistance and we've used it as support for the last 4 days. So I was hoping we'll use it as support again and push a little bit more towards the upside. But unfortunately, that did not happen. Friday was just an awful day in the markets overall. So that just did not give us the momentum that we needed to hang on to it. So another little push, to the downside Monday. So I think we might be a little bit opposites this week. I think a push down maybe Monday and Tuesday and then curling back up to finish, kind of right around that, like I said, the 1750 to 1850 by, Thursday and Friday. I think that's kind of going to be the shape that we see. Basically just something sort of like this week. Okay. And so long as Bollinger Bands keep tightening, the volume stays low. If we do see any type of sell-offs, we want it to stay on super low volume, and which is what we have been seeing. Okay, so we have been seeing decreasing volume overall, and that's what we need to see before we can see some larger, more positive moves towards the upside. So we've got the Bollinger Bands tightening. We did lose the 20-day EMA. That's kind of why I'm anticipating some downside right in here before curling back up. Last thing I want to take a look at, and then we'll be done, is going to be our indicators. So if we look at the RSI on the daily, it's starting to head back into oversold territory, once again giving us plenty of room to run. Even if you look at it on the hourly, starting to get towards oversold territory. So I think a little, sorry, I keep saying the same thing, a little push down, and then before we start moving back up. Oh my goodness, one thing I did want to go back to, I meant to talk about this earlier in the video, but it's going to be what I tweeted out yesterday. So AMC on Friday, essentially, oops. We are in this descending wedge right here. I think this descending wedge taking us down to that support line before we start breaking back up. So that's why, I apologize, I should have talked about this earlier. This gives you a little bit more look inside my head as far as I know it's ugly. So that's why I was kind of saying we'd see the push a little bit more down to the downside before, breaking back up through this week. Okay, so that's what I'm looking at as far as wedges are concerned. Our overall macro wedge, though, Like I said, I apologize, guys. I meant to talk about this sooner. Still looking pretty good. We did finish Friday back in it, so I definitely want to see, you know, this come down here, touch, and then moving back up out of the wedge. So apologies once again. That's what I'm going to be looking for as far as our wedges go. Okay, other indicators. Our MACD, not looking so hot. We want to see it curling back up. If the blue line crosses over the orange line, that is going to indicate more downside negative momentum. So we definitely want to see that not happen. We want to see it curling back towards the top. And oh yeah. Yep. Let's cover this and get out of here. OBV, okay? So even though we've been seeing some crazy price, the OBV is staying relatively flat. One way that you can look at this that'll really just help you sleep at night is, so I'm going to move the OBV up to up here on the chart. Now I'm going to kind of fit everything to scale here just a little bit. Okay, so once again, even though the OBV, yes, it has dropped a little bit, and I'm not going to sugarcoat it. GameStop's OBV does look better than AMC's, even though they both look good. So once again, even if you line this up, try to get it in here as best I can. So we've got the touch here, our touch is up here, so this is about as good as I can do it. The OBV is still up here trading at levels of when we were in that sort of $37 range. So to me, you guys know I'm not going to sit here and scream, oh, it's manipulated or anything along those lines. But this move altogether, this big downside push to me is kind of fake. Now, it's reality. The price is what it is. But I think the worst case scenario we would see is going to be moving back up in here. You know, and definitely getting back towards is AMC's fundamentals keep improving, you know, getting back up here towards, you know, even pre-pandemic levels and everything along those lines is just what makes sense to me. Okay. Now, yes, I know the float is bigger, yada, 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 yada. I get all that. Okay. But also the fundamentals are improving. There's way more shareholders. I'm not going to get into that in this video. This video is about technicals. But once again, you just match this up and you just, you know, just look at it. It's just, this does not say what is happening here. Okay? So just be calm, be patient. Good things are coming, even if we see more downside first. You've just got to relax. You got to show patience. Okay? I don't know any other way to say it. Everybody's just got to be patient. And if you're going to be on, you know, my Twitter where I tweeted out this, where it was like, holding is hard and quitting is hard. You're going to have to choose what's hard for you. Everybody in here was just like, holding's easy, bro, and everything like that. And it's like, well, not for a lot of people that have seen, you know, 60 and 70%, you know, hits to their portfolio. You know, holding becomes much harder at that point in time. And so, with all due respect, if holding is that easy, should see way less bitching and crying and complaining 24/7. Let's just show some patience. Like I said, I truly believe we'll get ours at the end of the day. But that's what I'm going to be looking for technical-wise on AMC heading into this week. So if I'm guessing, I think somewhere around 1750 to 18 is where we'd finish up this week. As always, barring anything crazy news-wise or anything like that. GameStop, you know, once again, Ryan Cohen did tweet out about Apple not falling far from the tree. Apple has a big event on March 8th. Once again, don't read too much into that, but if something crazy happens with GameStop, you know, like I said, I believe these are all in the same meme basket and everything like that. I don't see one of them shooting up without the other one going with it, but we shall see. It's going to be an interesting week. I will see you later, my friends. Have a good one.